Hi, this is Arlan Suderman, Chief Commodities Economist at StoneX, coming to you from the trading floor on this Wednesday, December 17th. We're just a little over a week away from the Christmas holiday now, and the markets are starting to show a little bit of that malaise. I wanted to take this opportunity to update you on where we're at with biomass-based diesel production capacities. You see from the chart that is before you, this data coming from the Energy Information Administration, the EPUS, EPA, and from StoneX, showing how we're producing biomass-based diesel well below our capacity. So how is this and why is this after we got these great RVO numbers from the EPA proposed really 6 months ago? And we're still not producing. We saw soy oil prices drop to new 6 month lows today on disappointment that we're not moving anywhere on this. And it all comes down to waiting for the final numbers from the EPA, the U.S. Environmental Protection Agency. There's three things primarily we're waiting for right now, and that is first of all, what's the EPA going to do with the small refinery exemptions? We already know what they are, but will they offset them with the larger requirements from the larger refineries? And the piece that will impact the final RVO number or blending requirement number. Currently, we have a 7.1 billion RIN requirement for blending. If they go 100% reallocation of the SREs, we could take that to 8.8 billion. The other question is then is what about foreign feedstocks? Currently in the rules, it's proposed that they get a 50% credit for any fuel made with foreign imported feedstock. The industry is complaining about that. It wants a 100% credit, and I understand that. They state that they're worried about there being enough feedstock supplies, and that right there should tell you something about what the final impact of this policy could be on demand for feedstocks such as soy oil, canola oil, etc. And maybe it's a legitimate excuse this year for complaining about the 50% feedstock, but obviously they want to get as much credit and as much value as they can for the fuel that they produce. The EPA has indicated some willingness to be flexible on this. So where are we sitting on this? So how they rule on these three things, as I indicated, could leave us with a final RVO somewhere between 7.1 billion equivalent of RINs to 8.8 billion. And so it is our sense here at StoneX that we'll probably end up with a positive number, just studying things that have been said, the administration's desire to help agriculture in this time of the tariff war via the biofuel program, et cetera. There's a sense that we will probably end up with reallocations of the SREs is somewhere between 50 and 100%, maybe even closer toward that 50, the 100% end of that range. And so that would be real positive. And in exchange for maybe 75 to 100% credit for on RIN credit for imported feedstocks, probably some type of compromise like that. But until we know, producers simply aren't going to produce more than what they have to. And so that's been really pulling back. Producers of the biomass diesels have been complaining about poor margins, compressed margins, and running in the red. And so that's why we're seeing this drawn down capacity. And while we saw in the last NOPA report that came out this week that soybean oil supplies are starting to build. And so the question is, when will we hear from the EPA? The partial government shutdown that we saw earlier this fall certainly didn't help, certainly slowed down work on this. We had anticipated that we would get the final regulations by the end of the year. We had hoped that we would see them in October. Then the partial government shutdown kind of put kibosh on that. That wasn't going to happen. And then we hoped by the end of the year. Now we're hoping by maybe Martin Luther King Day, mid-January, we'll hear. But there was a court that demanded that the EPA provide a date or a time, rather a timeline, I think is what they said, a timeline for when they may rule on this so we would have some certainty. And so the EPA says, okay, it'll be sometime in the first quarter of the year. That was a big disappointment to the markets overall. And one of the reasons we saw soybean oil prices fall off so sharply today, and a lot of disappointment. Now, that doesn't mean that the EPA couldn't come out with something in early to mid January. It certainly could. But the very fact that the EPA said first quarter rather than January certainly raised some doubts about just how far along are they in this process and when will that happen. So if you look, what's the impact on the balance sheet? Well, the soybean balance sheet has two primary demand factors: exports and crush. And what's driving the crush is soy oil going as a feedstock for the renewable fuels. Yes, there is some food use, but what's really the future of it is biomass diesel production. And so that's a big factor here. We saw some robust crush in the first few months of the soybean marketing year, although it did pull back a little bit in the latest month in November, according to the latest NOPA numbers given to us on Monday. But frankly, the crush for the first quarter of the soybean marketing year is exceeded the seasonal pace needed to hit USDA's published target by 25 million bushels. And right now, my target for crush this year is about 90 million bushels above where USDA is. Now, the export target, I have about 85 million bushels below USDA. So it's kind of offsetting themselves. I see smaller exports, even if China does buy the 12 million metric tons that they promised in the current marketing year. I still think total exports could fall short. Crush, I think, could exceed it. Now, what is the crush capacity? Overall, we're looking at crush capacity for 2026, somewhere around 3 billion bushels. So the capacity is there at this point. I don't expect us to use that. First of all, you have to have some maintenance downtime. And so you take off about 5%, but I think it'll fall short of that. The concern is if we don't hear the final numbers from the EPA until toward the end of the first quarter of the calendar year, then we could keep biomass diesel production suppressed for up to a quarter of the year. And so that could be a real concern going forward. If in fact we hear sooner rather than later, and if the numbers are positive and constructive as we think, we could see total crush this year go as much as maybe 140, 150 million bushels over what USDA currently has. If you figure that exports are going to fall short, that could still drop us, depending on what the final production number is. We could still see ending stocks drop to the low 200s. Now, that doesn't necessarily mean that the market needs to rally to ration demand when we're about to harvest a big crop in Brazil, but it does take away much of the margin for error should we have a weather problem in the United States, or even one still developing in southern Brazil or Argentina, which is still possible in those regions yet. Mato Grosso, center west Brazil, we're getting close enough to harvest there. Think of it as equivalent in center west Brazil to our growing season here in the Midwest of late late August, maybe even early September, equivalent there in that region of the country on the calendar. That crop is basically made in center west Brazil, most of it, not all of it, certainly because they've planted over a wide window. But we'll be harvesting some of the very earliest soybeans here by the end of December. Now, we'll pick up considerable momentum in harvest by mid-January, and we'll really see the first significant amounts of soybeans reaching the Chinese ports as we get into March. So until then, we are seeing China's China auction off some reserve supplies of soybeans. They're auctioning off a little over 500,000 metric tons per week. They're seeing purchases of 65 to 62.9% actually in this week's auction. The latest auction, we'll have another auction, I believe it is on Friday, Last week, I think it was a little heavier participation of it, but they're trying to make room for what they're purchasing from the United States. So they're auctioning off some of the older soybean supplies so they can put some of these new ones in. It's just not going as well as they think. So I think we'll see China take shipment of the soybeans it's been purchasing spread out over the next 8 months. But we estimate that they have purchased so far, based on our cash sources, somewhere around 7.7 million metric tons of the 12 million metric tons committed to. So they are making progress. Just don't expect the shipments to be all at once, expect it to be spread out over the next 8 to 9 months. It gives you a picture of where we sit in the soybean, soy oil type of a situation and the biomass diesel situation. We'll continue to bring you updates as appropriate from the trading floor. Until then, be sure to like and subscribe if you want to continue